your rent roll. You glance at that spreadsheet, see your scheduled income, and assume that money is hitting your bank account every month. You're wrong. Most California landlords operate with a hidden financial leak, a silent drain between what tenants should pay and what they actually pay. This isn't about evictions or missed payments, it's about a subtle, chronic underpayment that's costing you thousands annually. In the next 12 minutes, I'll expose this gap, show you how to calculate your true loss, and give you the tools to plug it permanently, without raising rents or losing good tenants. Your rent roll, as most of you track it, is a theoretical document. It lists the rent amount stipulated in each lease agreement. Let's call this your scheduled rent. But how often do you compare that scheduled rent, line item by line item, against the actual dollars deposited into your bank account each month? Most independent landlords in California never do this diligently. They see a deposit, they know it's for rent, and they move on. This oversight is costing you real money. The average gap between scheduled rent and collected rent for a landlord managing just 5 units in California often exceeds $700 per month. That's $8,400 per year you're leaving on the table, not due to vacancies, but due to a lack of precise financial reconciliation. Your rent roll is lying to you by omission, by not reflecting the reality of your cash flow. Now here's where it gets interesting. This $8,400 annual loss isn't a single catastrophic event. It's death by 1,000 cuts, or specifically 4 common cuts. First, partial payments. A tenant sends $1,900 instead of $2,000. You accept it because $1,900 is better than nothing, right? Wrong. You've just set a precedent. Second, waived late fees. A tenant pays a few days late, calls with a sob story, and you waive the $50 late fee. You think you're being a compassionate landlord. What you're actually doing is legally establishing a pattern of acceptance. Under California Civil Code, consistent waiver of a lease term, like late fees, can weaken your ability to enforce that term in the future. Waive a late fee twice for the same tenant in a year and you've effectively told them it's optional. Third, informal discounts or concessions. Maybe you offered to knock $100 off 1 month's rent for a small repair they handled, or you rounded down a prorated amount. These seem minor, but they add up. And finally, float days. Tenants consistently paying on the 3rd or 4th instead of the 1st. While not a direct monetary loss, it impacts your cash flow predictability and can lead to you covering expenses out of pocket while you wait for funds. These 4 seemingly small concessions accumulate into a significant drain on your profits, unnoticed because your focus is on the big number, not the precise one. You need to stop guessing and start knowing. Here's how you conduct your own 15-minute annual leak audit. You need 2 things, your lease agreements and your bank statements for the last 12 months. Open a spreadsheet. For each property, list the scheduled monthly rent. Then next to it, create a column for actual collected rent. Go through your bank statements month by month, property by property. Record the exact amount deposited for each unit. Don't round, don't estimate. If a tenant paid $1,950 instead of $2,000, write $1,950. If they paid $2,000 but it was on the 5th and you didn't charge a late fee, make a note. The difference between your scheduled rent and your actual collected rent is your leak. If you have 5 units, each renting for $2,000, your scheduled annual income is $120,000. If your bank statements show only $111,600 deposited, you have an $8,400 leak. This isn't complicated accounting, it's simple subtraction. This audit will surface every dollar of chronic underpayment in your portfolio. It's a harsh truth, but it's the truth your financial future depends on. You've identified the leak. Now how do you plug it? The answer isn't a complex software suite. It's a 1-page reconciliation system you can implement today. Create a simple monthly ledger for each property. At the top, list the scheduled rent, scheduled late fees, and any other scheduled charges, e.g., pet rent, utility reimbursement. Below that, create columns for date paid, amount received, difference, short over, and notes. Every time a payment comes in, you fill this out. If a tenant pays $1,900 on the 3rd instead of $2,000 on the 1st, your ledger will immediately show a $100 shortfall and a late payment. This isn't just tracking, it's a visible, undeniable record. It forces you to acknowledge every discrepancy. This system ensures that you are constantly aware of the exact financial status of each tenancy, allowing you to address issues immediately before they become chronic problems or establish a pattern of non-enforcement. Consistency is key here. Without a precise record, you're just relying on memory. And memory is a terrible financial tool. Now for the delicate part, resetting expectations with existing tenants who have grown accustomed to your leniency. You don't need confrontation. You need clarity and a firm but polite reset. This can be done with a single written notice. Here's a template for a conversation script you can adapt for a letter or email. Subject: important update regarding rent payments and lease terms, dear tenant name. This letter is to clarify our mutual understanding of the lease agreement for your residence at property address. As we value you as a tenant, we want to ensure clear communication regarding all aspects of your tenancy. Your current monthly rent is scheduled rent amount, due on the first of each month. As per Section X of your lease agreement, a late fee amount is assessed for payments received after the grace period end date, e.g., 3rd of the month. We've recently reviewed our payment records and noticed a few instances where payments were either slightly short or received after the due date. While we understand that unforeseen circumstances can arise, consistent adherence to the lease terms is essential for the smooth operation of our property management. Moving forward, we will be strictly adhering to the terms outlined in your lease agreement regarding rent due dates and the application of late fees. This ensures fairness and consistency for all residents. Please ensure that your full rent payment of scheduled rent amount is received by the first of each month. If you anticipate any difficulty in meeting this obligation, please contact us immediately to discuss your situation before the due date. We appreciate your understanding and cooperation. We look forward to continuing our positive landlord-tenant relationship. Sincerely, your name, company name. This notice is crucial. It resets the baseline without triggering defensive reactions or triggering just cause eviction risk. It's not an eviction notice, it's a restatement of terms. It uses phrases like clarify our mutual understanding and consistent adherence to the lease terms is essential. This isn't about being mean, it's about being professional and protecting your investment. Most tenants, when faced with clear communication, will adjust. Those who don't are telling you something important about their reliability. You've heard it directly. Scheduled rent and collected rent are two different numbers. You've learned how partial payments, waived late fees, informal discounts, and float days are costing you thousands. You now have the tools to conduct a 15-minute annual leak audit and implement a one-page reconciliation system. And you have a script to reset expectations without confrontation. Stop letting your rent roll lie to you. Take control of your cash flow, powered by LeaseBase intelligence.